The first currency pair I'll share with you, and it might be a little bit hard to see. I'll just give you a preamp. It might be a bit hard to see as we are looking on the charts. I hope you have downloaded the materials. You might want to even print it out or try and zoom in on it. If you can look at it on your own computer screen with the charts on your MP4, that would be great as well. We are looking at the Aussie US over 22 weeks on the H4 time frame, and I'm looking for trend following trades. So this is the Aussie US over 22 weeks. We're looking for trend following trades. I've drawn a red line in the middle there, and we'll be starting looking for trades on the left side first. After we go through all the trades we found on the left side, then we'll start looking at trades on the right side. Okay, so as we get started, just looking at this chart, in general, what should be your feel? What is the trend of the Aussie US dollar? And this is from 1st of May or end of April, 1st of May, all the way to current 30th or 1st of October. What is the overall trend of the Aussie US on the H4 time frame? I hope you're telling me it's an uptrend, right? Because it has gone from about 6400 all the way to 7192, right? 7192. So it's gone all the way up. And as we know, it's never going to move in a straight line. It has set in a range to start off, went up a little bit or went up quite a bit, set in a bit of a short gradient move upwards, went up, set across, went up a little bit more, came down, and then now it looks like it's going back up again. So you'll see that in the general, if you focus too much on a small area, you might think that it's a downtrend. If you focus too much on the wrong area, you might think it's a downtrend. But if you look at it as an overall view, you can see that it's been moving up in general. Okay, so with that, the first thing we're going to think about is that it's been moving up in general. Even if I don't know the economics, it would be that I know economics in general have been quite positive for Australia, for the Aussie, or it has been quite negative for the US dollar, right? So you remember that it's Aussie against the US dollar. It's either a strong Aussie economics or a weak US economics, which has led to that upward move in the Aussie US. So that's first step, right? Economics. Remember your pyramids? That's the first step. Putting it all together now. I hope you're taking notes. Putting it all together now, if I start looking at the Aussie US dollar, my first step is based on the recent economic data since May to now. It has been either stronger Aussie dollar or weaker, or stronger Aussie or weaker US. And that's the way it's been moving recently. So that's step one. Step two, trend looks like it's been moving up in general. Trend looks like it's been moving up in general. So if you're looking at an upward trend, are you looking to buy or are you looking to sell? In general, we're more likely to look to buy, look to buy, look to buy. Support resistance lines are there. I've drawn my lines. I've reviewed them. I'm happy with them. I trust my lines there. I've seen how they have reacted. First hitting this point, turning down, hitting this point, turning up. I've seen how they've hit and turned, hit a level and turn back up, hit a level and turn back up, hit this level, try to turn down, hit that top, turn down, hit this level, turn up, and hit and turn back up. So you can see I've very easily identified points where it's hit and turn back up. So I'm happy with my support resistance lines. I need to take a closer look, and I'll guide you through taking a closer look at the indicators. And because we're looking in a general view right now, we're not going to look at step 5, whether there's any upcoming news right now. So let's start looking at trades one by one. So this is the left side of the chart. First trade where we have that yellow golden line there. Okay. Step one, fundamentals of the currency. We've already been through that. We said that it looks like over this period of time, it has been stronger Aussie economics and weaker US economics. So fundamentals of the currency should strengthen. It should go up. Trend, we've been through that. Price is moving up. You can even see now that before it was moving up. Support and resistance lines. At this point, you can see that price is it bouncing off? Bouncing off means it hits and turn back down, or hit below and turn back up? No. Is it moving towards? At this point, is it moving towards? No. Is it breaking through? Breaking through resistance. So this is your resistance level. It's breaking through resistance. And then your indicators are showing you strength or change. Is the Bollinger Band telling you strength or change? It looks like slightly outside of Bollinger. You might have to squint a bit, right? It looks like it's slightly outside of Bollinger, but it's still along that move. MACD, see that big triangle there? MACD starting to form a triangle there. This is above the zero line. We're on an H4 time frame, so we're looking at the stochastics. Stochastic is in the overbought region. It's in the overbought region. But remember, things can be overbought for a period of time and prices will still continue moving up. Then you look at the PSAR, the dot is below the candle. The dot is below the candle. So you can see that currency should strengthen, it's pointing up. Price is moving up. I mean, trend price is moving up. It's breaking through the resistance, is moving up. Bollinger Band is slightly outside. We expect it to hold there. MACD shows a change. The fast MACD shows a change. The stochastic shows that it's okay. PSAR is okay. Everything is aligned to tell me that it should go higher. At this point, and I'll get into the stop loss and take profits a lot later. I'll just share with you right now. Your stop loss will be below the blue line. Your stop loss will be below the support level. Your take profit will be above, well, will be below the resistance level. So below this blue line. And what you notice at this point is if you entered your trade at this candle, it would have gone up, across, and then up to your take profit level. It would have gone up, across, and to your take profit level. Okay, and you'll see that that happened within the week. Between each dotted line, between the two dotted lines, is a week. So with less than a week, it's gone up to your take profit level. At this point, I'm not going to be calculating pips with you. I'm not going to be calculating pips on how much profit is going to be because I'm more concerned to make sure you follow the 5 steps, make sure you understand how to apply the 5 steps rather than to get you happy or get you excited with the number of pips you might be making. So that is trade number 1, where we see it going up, breaking through resistance. Indicators are all good, showing me some change towards my resistance level, my take profit level. Trade number 2. You can see again, very quickly after that trade, you would have gotten out of that trade. So that's one trade you would have hit and gotten out. If it came down, I know at this point you might be wondering, why don't I sell it down? It wouldn't work if you sold it down. Well, you'll make money, but it will be quite a harrowing experience because fundamentals, move back one slide, okay. Fundamentals, it will look like it should be going, you know, your strength should be up. Currency strength is up. Trend is up. Support and resistance lines, at this point, it will be turning down because you're saying it's bouncing off resistance level. So you got 2 up arrows. Step number 3, you got a down arrow Your indicators are pointing down. You've got 2 up arrows and 2 down arrows. I'm sure you can still make money, but it's going to be more risky. It's going to be driven by something else. It's going to be a bit unknown. So I'd rather look for the buy, look for the buy, look for the buying trades, because in my view, fundamentals of the currency should strengthen. So straight away, we can see at this point here, again, currency should strengthen. Trend is moving up. Support and resistance. Price is what? Price is hit and bounce. It's bouncing off support. It's bouncing off the support level. Actually, I can draw. Let me try that. Right? It's bouncing off the support level. It's pointing up. Change that color. It's pointing up, and this is the indicators are. It's still inside a Bollinger Band. This is telling me a change. This is telling me a possible change coming up. So this is a slower. Here you have the slower MACD. Here you have the faster one. Faster one is already showing you that triangle. It's telling you that I can buy it up. Again, your stop loss level will be below that blue line. Oops, can't draw a straight line. Will be below that blue line. Your take profit level will be at this point. You would see that it would have gone up, come back down, turn back up, and hit your take profit level. This will be a 2-part trade where you can make a decision whether you would get out at this point or let it turn and get out at this point. This is where that trust and confidence is required when you start looking and applying this strategy, because you're going to hold on to it and you're going to know that your support levels are good. Putting your stop loss at the right place is going to be important as well. So that's your trade there, trade number 2. How do I do this? Trade number 3. You can see again, this was trade number 2. Trade number 3 is at the same point. So a lot of times you might not be looking at the chart and you might have missed out a trade. This is where you understand that even if you do miss a trade, it is always going to come back. There's always another trade opportunity for you. And this is exactly the same setup. You can see that it is strengthening. Currency should be strengthening. Price is still moving up. Price is still bouncing off the support level. Indicators are showing change. It's still inside the Bollinger Band. And this is where you could again be looking to do your trade entry here, your stop loss below, your take profit here. Okay, so again, you've got another trade within that same week. We're not selling it down at this point. Your fourth trade, you're looking at it going still strengthening. Aussie dollar is still strengthening against the US dollar. Price, look, it's still been moving upwards. It's still been moving upwards. Price is again bouncing off support level. Price is again bouncing off support level. The indicators, it's not outside of Bollinger Band, so that's a good one. The MACD, the fast MACD is showing you a change. The slow one is also starting to show you a change as well. Again, at this point, you could be looking at a entry here, a stop loss here, and a take profit here. What you notice after 4 trades now is that a lot of times when you are very selective with your trades, it's not about whether you make money or not. It's about how much you make. When do you want to close the trade out? You can close it before. Anytime here. If it's outside Bollinger, you can close it there. You can close it anytime here, or you can hold it all the way to take profits. So it's not about how much you make. It's not about whether you make. It's about how much you make. When do you want to close out of a trade? Again, that just comes down to your risk appetite. It comes down to your capital. It comes down to your targets. What kind of targets have you set? Next, we have another trade here. Same thing, moving up. At this point, trend is moving up. Price, currency should strengthen. Trend is moving up. Support and resistance is not bouncing off this time. It is breaking through. So that's your resistance level. It's breaking through resistance. Your indicator, your Bollinger Band, is outside. Price is slightly outside Bollinger Band. So my question now is, should you be entering this trade? This is a trick, right? So if you don't follow the steps, you look at Bollinger Band and you want to rush into that trade and you say, I want to jump into this trade, what's going to happen? It will look like you're going to make some money. It will look like you make money. And then the next moment it comes straight back down. In reality, what's going to happen is you're probably going to close out a trade at either break even or a small loss. It might not hit your stop loss, but you would have been looking at entering a trade here, stop loss here, take profit here. And what's going to happen is it looks like you made money, turn back down. At this point, you would have closed out your trade at a small loss. But I'm happy to take small losses when I'm making take profit levels over the past 4 trades. Just then we had. On the 5th one, we're taking one small loss. That's okay. And that's where it takes the understanding to know that it's not going to be 100% success. It's not going to be 100% profit. There are times where if you skip a step, the reason why you're going to lose money here is because you have skipped a step. You've ignored that blue arrow there, that it is outside of Bollinger Band. Right? So clear all that. It is outside of Bollinger Band. If you jump into a trade outside of Bollinger Band, what is likely to happen, it might continue moving up, but we're likely to see price come back. And in this case, it came back, hit the support level, and bounced back up again. Here, you can see it's slightly better, where currency again should strengthen. Price is definitely moving up. You can see that it's been going up for the past 1, 2, 3, 4, 5, 6 weeks. It's been moving upwards over the 6 weeks, like that. Okay. At this point now, it is breaking through. Again, it is breaking through resistance. It is breaking through resistance. And then you could be looking to enter a trade here. Stop loss below, take profit level. Oops, let me move this one away. Take profit level up here. Straight away, you would have the next candle, you'll be making money, and then after that, continual. It's about where you want to get out of the trade. You would probably get out here because that's outside of Bollinger Band. You would have learned that if you didn't get out of Bollinger Band like this, you would lose money. So the next time you see it's outside of Bollinger Band, you would get out. That's Bollinger Band, your MACD, you would have seen that it looks very nice, good strong triangle upwards. Here, good strong triangle upwards again. So you see that by putting everything together, these 5 steps, fundamentals, looking at the broad picture, putting that pyramid into place, we know that Aussie should be strengthening against the US dollar. Trend over this period has been moving up. Price has been breaking through resistance or bouncing off support, turning back up. Indicators, pay attention to that Bollinger Band. MACDs have been quite strongly pointing upwards. And then we've knew the last step, because we're not actually trading it live, we're ignoring the last upcoming news. You can see that so far it's been doing quite well. Again, at this point, you will see Currency should be strengthening. I'm repeating myself, but this is what you do. This is what you do over and over again. At this point, you'll see currency should be strengthening. Trend has been going up, but support resistance, price has turned down, hit this support level, and it looks like it's bouncing off. It's bouncing off this support level. You could be looking at your Bollinger Band is okay. Your MACD, you can see that triangles there. You can look at that as a change. That's where you enter your trade. Stop loss, take profit level. It might not have hit your take profit level, but at that point, you would have gotten out as well, because you would see indicators here telling you that it is starting to turn back down again. So this is where you have those trades, you put everything together telling you when to exit, when to enter, and when to exit. The same way as you look to enter a trade, you can look to exit a trade. The same steps that tell you to enter a trade, you can use to tell you to exit a trade. MACD crossing down, get out. MA outside of Bollinger Band, get out of a trade. So it's all there. So that was the first half, that left side of the Aussie US on the H4 time frame. Let's look at the right side of the Aussie US on the H4 time frame. You can see now again at this point, I'll scroll back one again shortly. You see that we're at this point here. Trend has been moving up. Trend has been moving up. Economics is still telling me that Aussie should be stronger against the US dollar. Trend is moving up. We still got our support resistance lines. We're taking a closer look into the indicators. So you see here, trend has been moving up. Currency should strengthen. Up. Step 1 is up. Step 2 is up. Step 3, support and resistance lines. It is here breaking through resistance. Breaking through resistance. You could be entering a trade here. Stop loss below. Take profit level here. Remember, stop loss always below that support level or above that resistance level. Take profit level is always below the resistance level where it's likely to hit. You'll see that straight away, if you had this trade, it would have gone straight up and hit your take profit level. Because Bollinger Band works, MACD is showing strength. We've got nice triangle form. Slow MACD is showing some change or some strength. PSAR is far away. Stochastics is in the overbought region. Again, overbought is going to keep pushing it higher. It's hit that resistance level. Don't look to sell. I know the temptation will be there to try and sell. Don't look to sell, because we want to be looking for buying opportunities. Follow the trend, buying opportunities. At this point in the region here, you would not be looking for any trades because nothing fits. Nothing would fit. At any point, looking to buy here or to buy here, you will not be able to answer step 3. Trend might be going up, but at this point here, step 3 is going to be hard to answer. It is not bouncing off a support level. It is not moving towards a support level. It's not breaking the resistance level. It's just doing that. So it's not doing anything. Same thing here. Not bouncing off a support level, not moving towards, not breaking through. It's just sitting there. Same thing here. And especially at these 3 points, if you did try to enter a trade, where would your stop loss be? Where would your stop loss be? It would have to be here, here, and here. The right place to put your stop loss. Where would your take profits be? Here, here, and here. Straight away, clear as day, you'll notice that your risk is huge, your profit medium sized, risk is big, profit medium size, risk is very big, profit very small. So it becomes the point where it brings up the point where if you don't follow the 5 steps, or you're trying to shortcut, jump ahead, or force a trade, the most likely scenario is going to be that you have a trade, but profit levels are going to be small, risk is going to be big. And that's a very common situation for a lot of new traders where they want to have a lot of trades. They think that they need to have a lot of trades, and then you experience small profits, big losses. Small profits, big losses. In the long run, you're not going to make money with small profits and big losses. Coming back to this example here, currency should be strengthening because we've seen the economics. Trend, price is moving up. Support and resistance, price is breaking through that resistance level, breaking through. Indicators are showing Bollinger Band is okay. Out, you see a triangle here. You see a big triangle here on the MACD. Strength. Again, you would be entering a trade even slightly higher. Stop loss at this point. Take profit levels quite a bit higher. As a comparison, those three on the left, big stop loss, small profits, and this one here, relatively small stop loss and a big profit level, take profit level. Those are the kinds of trades I hope you'll start looking for using the 5 steps. And then you will not enter any trades here as it's turning down. So what you'll notice is that if you made good trades on the Aussie US dollar over those weeks, for 1, 2, 3, 4 weeks, you will not be looking for any trades on Aussie dollar. You might not even be entering any trades during those couple of weeks because it is dropping. It is going against your trend. It is going against what you've seen the long-term move to be. It is moving down. As it moves down, I know the temptation will be there to sell, knowing that you might be very convinced you could make money. I would rather you make money, but do it safely. So sit there, look at other currency pairs, look at other trades. Wait for this to happen. Where it's coming down, price has still been moving up in the overall direction, right? So it was here, it's been moving up in the overall direction. Price is bouncing off support level, Indicators are showing change and strength. This is where you'll be looking to enter that trade here, stop loss here, take profit level, and you see that it moves straight towards your take profit level. So with that, you can see, I hope that I'm showing you 5-step process. If you answer them as you go through, and answer them with what you see, not based on what you hope. You're looking at small stop losses level, you're looking at reasonable take profit levels, and we are trading from line to line. I do know that a lot of you are relatively new to trading, new to FX. So what I hope is that as a starting point, you focus on trading the H4 time frame. I'll only be showing you the H4 time frame, and I hope you focus on the H4, because with the H4 time frame, what happens is you spend a lot less time sitting there watching the charts. You are able to come in, spend 15 minutes, half an hour, or even at the most 1 hour looking at a chart, looking at all your charts, and then identifying trades based on this 5-step process. With these 5 steps on the H4 time frame, you also have more time to analyze trades rather than having to rush into a trade as the market moves quickly. So what I want to share with you now is also that we just looked at the Aussie US over 22 weeks on the H4 time frame, and there were only 10 trades. 10 trades over 22 weeks means it's about one trade every 2 weeks. One trade every 2 weeks, right? So don't think that you're going to use the H4 time frame on the Aussie US with the 5 steps and you'll be entering trades 5 trades a day. It's not that kind of scenario. It's not that kind of trades. You're looking at about good trades, good high probability trades, high profitability trades, 22 weeks, 10 trades, but we've seen that we are very profitable with those 10 trades.